Good evening, this is Nick Inman from VolumeProfileTrader.com on Tuesday, February 28th, and with one trading day left in the month of February tomorrow. That's just something to be aware of. Also, the fact that the market just continues to slowly grind higher means that there's really nothing wrong with this market. And I was watching Fast Money right before I turned this on, and Guy Adami said something that I think makes a lot of sense, and it's you usually don't get this much time to sell a high. So with that said, that's just something to be aware of. Now also, that doesn't mean that the S&P can't roll over, because if we do not, let's face it, since the market started going higher, well, since the new year, let's put it like this, since this really defined trend started, we've touched the top of this channel every single time prior to any type of selling pressure. So it would be crucial to see that again, and if we don't get that, then I would consider that, though it is a higher high relative to like actual price, relative to the trend line, we didn't make a successful higher high, and rather we made a lower high, and you're looking for some type of rollover. So that's just something to be aware of. And you don't want to get too greedy, but you want to realize that the market is going higher. So overall, nothing's really wrong. NASDAQ, another high today, so just like the S&P, nothing really wrong. I'm going to kind of blow through these because a lot of names that we cover continue to work. We have a few that aren't really doing what we expected, but they're not wrong yet. We did get stopped out on one today, which is PriceSmart. It didn't work out. We took barely any risk, and small stop out, no problem. Nothing really to worry about. 200 days still creeping up, and just on this chart, the last 52 weeks looking at this, it's been a great buying opportunity. We're actually right there. We have about another $3 or so of downside before we get to that 200 days. So it's just something to be aware of, and I'll just bring over this. Point of control for January is $61. Looks like we also have a little gap there. So if you want to set a price alert around 62.5 or 63, whatever the case may be, to just keep an eye on this, because it could still turn into a really nice opportunity. Alright, we're just going to go through this. Apple, another all-time high today. This is almost ridiculous, just for the fact that this huge selling day washed out all of the sellers. That was all the selling pressure left in Apple, and we gapped lower the next day and have moved higher every day since. Or intraday high all but one day, which was yesterday. Or I'm sorry, intraday low was higher every day, except for yesterday. We penetrated some, but what we really did was close the gap from the 23rd to the 24th. So Apple, it's actually a really easy hold, and even if it does get shaky, I still see no reason to really sell it. American Express holding in there after a nice day yesterday. Really an inside day today, meaning today's intraday range is within yesterday, so that's definitely a do-nothing day. MasterCard, new high. What a surprise. Sorry, phone call, and now I lost my train of thought, but Alpha Natural Resources is on the screen, so we're going to talk about it. Still hasn't made a new intraday low relative to what happened on earnings, but continues to drift lower. I nearly just said the heck with it and just took my losses, but that would have been right near the lows of the day, and that's why I didn't. Well, lows of the day in hindsight, but I didn't because I've seen that happen before, where you take the trade off, and because it continues to go down for a couple of days, whatever, it looks like it's not going to work, never comes down to hit your stop, but in fact, the next day you get exactly what you were looking for, which was some type of higher close, and then you have a nice push to the upside. So I do think that this trade is still valid just because we haven't hit our stop yet. But if we do, which we may, and it may be soon, there's really no reason to stick along with this trade. It's frustrating because it looked, I'm not saying that this trade is over, but the way I'm talking it might sound like it is, but the way that this has set up with this point of control, I mean, there's just no volume here for the last year until you look down at this $20 level. And to see that we're struggling against these levels is very frustrating, and just something to take note of. Peabody Energy, this was pretty much a do-nothing day. If I zoom in some, you can see down not even 0.5%. So just let this continue to do what it's going to do. Hopefully we get some type of turnaround. If we don't, you can go ahead and take it off. Not even a problem. Tech Resources up 2% today. Yesterday's weakness was today's opportunity. You can see we had a nice bounce. Thought we were going to get lower prices, some type of pullback back to this range. We didn't. So that's just something to be aware of. Tech Resources still looks good. Alright, bringing up older names that have worked for us for trades in the past. Walter Energy. I'm going to get rid of these drawings really quick. Bear with me. If you remember on Walter, we were buying back on these lows. Had a nice pop to the upside. I took profits at the top end of the channel. What we're seeing now is basically consolidation. And you can say it's even above this most recent lows, this consolidation down here, which went on for about a month. We're doing a pretty good job of hanging in there. We do have decent volume down here, though 75's the real volume. But on the intraday chart, what I'm liking is the last 2 months, we're holding both of those point of controls. I'm seeing this little triangle pattern, and well, you could call it a bear flag or just some type of sideways consolidation. If we start to break above 67, 68, you're going to want to hop on that trade, and you're going to look for a test of the mid-70s once again, and that's where you look to take your profits on Walter. So it's not a right here, right now. However, if you look at what's going on, I should say Walter Energy is doing a good job trying to hammer out some type of base, so that's just something to take note of. Mosaic, the only reason I want to bring this up is because we have point of control for February at the top end of the range, and it's probably going to be used for some type of launching ramp, possibly for a move higher. So you're looking at these most recent days, and as long as we stay above them, we should be okay. If we start coming below, then you're going to want to take that position off and look to reload at lower prices. Potash. This is, I think I've brought this up before, but all I want to say is value area low for the year. I don't think this is a bad spot right here, right now, to start nibbling and buy a fourth of a position tomorrow and try to scale in over the next week or so, and then find yourself taking profits up in the mid-50s. So I do think potash has some great potential. Win, this is, no, let's look at Win, which I've taken a third of my position off in Las Vegas Sands to exchange for Wind, and I did that on the 23rd. It started paying off on the 24th, but then we got 2 down days in a row. We did get a point of control shift down to this 117 area, which is good. The lower it goes, the more potential we could see for some type of bigger bounce. But I then look over at Las Vegas Sands, which is covered by a huge rectangle. But the point is, it was up over 3.5% today. The high 55. I don't know if that's a new high since the March 2009 lows. I know it's close. No, we have 47 more cents, so you could say close enough. But you can see off of this, this is actually the 400-day moving average. Just looking, I did a 2-day chart. But you can see that's still trending higher, so the trend's still to the upside. and point of control support 46. So don't you think if this does get some type of sell-off down to, call it $50, people will be willing to snatch it up in a heartbeat. I know I will. I'd love to re-add to this position, and hopefully this win position will turn around, and we'll see some type of move back up towards 135. That's what I'm expecting. That's what I'm playing for. However, I didn't buy options on this, which I normally would. I just bought shares, so I'm not battling against time, which is a good thing. Which actually brings up Amazon, which is starting to perform. It was nice today. I bought more. I have a full-size position in this now. I'm on calls going out to April, I believe, the 190 calls in April. Usually I go out right at the money, but I was looking for a little more leverage to the upside, so I went to April, bought the 190s, looking for a bounce, only up to the mid-190s where I'll look to scale out of it, hopefully for a double. They're up about 25% right now, so not too bad. One good thing is, here's a good volume lesson. You have volume declining for 4 straight days when it was really just consolidating, and then we have a nice volume spike relative and coordinating with price action. So really what we want to see is a breakout above these highs. I'll show you this is what the real promising chart looks like. 3 months in a row, point of control is at the bottom end of the range. You can see the point of control formed there for the last, I think this is the last 90 days. And now you can see now we're getting a push higher. We're seeing price confirm with the volume profile. That's good. We may have a little bit of resistance right here at these levels, but if we can push above that, you should see these low 190s test the February highs again, which is good news. American Electric, I said yesterday, big bounce off of the point of control for the year. All we got today was a little bit of consolidation, and there's really nothing to do. If you do want to be a part of this, pays 5% dividend, maybe sell some calls against it to enhance your returns. But I do think this one, it's going to give you an opportunity, low-risk opportunity to work. Under Armour, new highs today, nothing wrong with it. So I do think that you want to remain on that train. Ford, a little bit of a pullback today. Still would love to see, we're against the bottom end of this most recent balance range, 50-day moving average moving up. But I would really love to see it move back down towards 11, basically the mid-11s, and that's where I would love to try to pick up more shares. Or if you look at it on the intraday chart, what we see is, sorry again, but what I really like is we do have pretty good support down at this $12 level, and I have said that's where you want to look to be a buyer. But I do like this point of control down at 1180, so if we do get a move down there, I still think that's valid. Ford, really the month of February, it's been nothing but an inside month relative to January. Therefore, it's, you want to buy as low end of the range as you can get. So what we've had is we've had an uptrend, and what you want to do is buy the bottom end of that range after it starts balancing. And you'll see this very often. I know this is one of the most common patterns when you look at actual day patterns, like an intraday price chart pattern. And you'll see, and this could go up or down, you'll see a rally, one way or the other, in this case up, and then you'll see a consolidation, and the bottom end of that range when it pulls back, that's where you want to look to be a buyer. And for this example, it's right around that $12 range, and I do think that that's a valid level. The only thing that's a little frustrating is you don't have a ton of volume confirmation here. There's good volume here, but make no doubt about it, $11.30 or so is the better volume, and that's just something to be aware of. So, overall, if you don't think that this is a good trade, then, a good trade is also holding cash, and there's nothing wrong with that. So just something to be aware of. Actually, two other names, actually three other names. Wendy's, we're getting our pop, good volume today. Just something to be aware of. It should have no problem. I do think that this is going to break out to the upside. So even at $5.18, I don't think this is a bad opportunity. ConocoPhillips continues to work. However, we're at the value area high for the year. If you want to look to take some profits right here, right now, not a bad idea. I want to say our gains on this is close to 15% in shares. And I wish I had options on it, some call options, but I don't. And just owning the shares, 15% gains or so, still pretty good, but not quite the return you'd get with options. Halliburton, I just want to say that, coming down, the volume's getting lighter, that's good. We tried to, it did break out from the high volume relative, the really high volume around 35, but you can see the top of it. And I sent an email saying I took profits, and I have to say it was as close to the high as you can get on Friday. And you can see we had a nice reversal off the very top of the high volume, looking for some type of pullback. If I bring up the intra-month or intraday chart, you can see the monthly profiles. This 37 down to 36, call it 50 level in February matters. You can say even matters in January. So you're looking for some type of bounce there, and if we get it, I think you do want to go for it. I have about a fourth of a position size in Halliburton, and I'd like to add to it. So anyways, this is really it. Stick with what's working. If it's not working, is it not working because it's consolidating and you bought too high or you bought too much? Or is the stock going down? And if it's going down, then you don't want to be long. But if it's consolidating, perhaps you bought too much, maybe one thing to do is just to lighten up how much you own. So take care. Have a good night. Remember that the Q&A is tomorrow, 8 p.m. Eastern Time. Register so you can join, and hope to see you there. Hopefully we get a lot of good information out, and we learn a lot tomorrow night. So take care, have a good night, talk to you tomorrow.